When I think back to when I first started taking business classes back in the late 80s, the Japanese economy in many ways was considered the envy of the economic world. With their just-in-time inventory systems, their quality control practices, the power of the kairetsu. And a lot of this was reflected in the stock market, which really vastly outperformed ours here in the US. Until the early 90s, when things kind of started to change. And the US stock market kind of took off with some bumps along the road until very recently when we've now seen the Japanese stock market hit new highs again, but it took a long time to get back here. So I know this is a hard question, Eric, because we could spend a month on it, but as succinctly as you can you give us a 30-year history of the Japanese economy?
Yeah, so as you rightly point out, at the end of the 1980s, their stock market was doing really well. The Imperial Palace in Tokyo had a higher land value than the entire state of California. They basically had an enormous bubble that popped around the 31st of December, 1989. The stock market fell 60%, real estate prices fell 60%, and Japan's economy began to stagnate and the banks found themselves in trouble. So what happened in Japan was that the economy eventually wound up in deflation and government debt levels began to soar from 60% of GDP to now over 200% of gross domestic product, a phenomenal level of debt that's double what we have here in the United States. So the solution, if you will, was to put interest rates at zero and hold them there for a quarter of a century, and for the Bank of Japan to do the largest quantitative easing program ever undertaken in history, bringing its balance sheet to 120% of Japan's GDP. By way of comparison, the Fed, after 4 rounds of QE, got its balance sheet to 25% of US GDP. So the yen during this time has been very volatile. There were times in which it was very strong up until about 2013. From 2013 onwards, the yen has generally speaking been a very weak currency, but sometimes with very abrupt moves like we saw in August when it soared after the BOJ unexpectedly hiked rates by 10 basis points.
Right, and so what started out as maybe the lost decade kind of became something a little bit worse as the years went on from the 90s.
Yeah, that's right. It was sort of a lost 3 decades.
Yeah, right, and I'm glad you brought up the yen because a lot's been written, particularly this year, about the appreciation of the yen, and then more recently, the reversal of that as the BOJ did begin a tightening cycle where most of the global economies were entering an easing cycle. So Jim, kind of what do you make of that and the yen as a currency compared to the dollar?
The average year-over-year CPI in Japan was 0.2%. For 30 years. They were immensely frustrated that they could never spur any sort of inflation, and half of the time they were in some level of deflation. So then you got to look at what came along in 2008 to 2010, where all of a sudden our rates went to zero, and so no longer was that carry trade possible. So the yen appreciated to its almost highest level ever against the dollar then, and since that time now has cracked over 40% to its current levels. Now again, we said that huge rate hike of 0.1%, and now their short-term rates are 0.25. But my point is that if they are reluctant to hike rates further, it is perfectly understandable because they went through so long of never being able to get even the slightest bit of inflation. I think they have a different concern than us. They're worried that inflation is going to go away, not that it's going to stick around. So I still am somewhat bearish the yen. I know we had a wicked move higher this year, and I think a lot of that was the positioning to take off some of the carry trade, because when so many people get a trade on, and then all of a sudden when they start heading for the exits, boom, it goes very quickly. But I still think if you look at it, their path to higher rates, I think, is not going to be so easy.
And certainly when you look at the implied volatility of the yen options versus some of the other currency options, it spiked earlier, but it still remains elevated versus the other major currencies that we trade here. So, and I know that some of that can be they're a net importer of oil, and so they may be more susceptible to things like supply shocks because of geopolitical considerations in the Middle East and things like that. How do you look at that, Eric, in terms of the volatility of the currency?
Yeah, the currency is absolutely more volatile, or at least it has been in recent years, than the euro, the pound, and other major currencies that trade on the exchange. In Japan, as you rightly point out, imports almost all of its energy. It produces almost no coal, no natural gas, and almost no crude oil. So when energy prices go higher, that currency is very, very vulnerable. The good news, I guess, at the moment is that those prices have come back down a bit.
Right, as some of the geopolitical tensions have eased for now, but certainly all of this contributes to a higher volatility currency than a lot of the other majors that we tend to watch. So shifting gears just for a second, in the United States here, we look at the S&P 500, which tends to be a broad-based index, right? That's kind of a barometer of the stock market here in the United States. The NASDAQ, which tends to be more tech-oriented. The Russell 2000 small cap index. How would you describe the Nikkei 225 index in this context?
So I think the main difference is that the Nikkei 225 index does not have very many technology stocks. The NASDAQ and the S&P are very technology dominated, especially in the past few years, whereas the Nikkei has a lot of industrial companies, some healthcare companies, a lot of consumer staples and consumer discretionary companies, including the auto manufacturers. But it's a very different index than the ones we have here in the States.
We have to remember that Japan is the fourth largest exporter in the world of finished goods. And you mentioned automobiles, also appliances, chips, things like that. They're huge. So a weak yen has always been viewed to be good for those Japanese companies. And it obviously is. And Beck, if you look at the news articles from 2010, when the yen was uncomfortably high for them, they were in a bit of a panic trying to figure out how to get it lower. So they, on balance, they want it lower to help those companies. Now, the problem is if you weaken it too much and you cause inflation, you cause your citizenship to not be able to buy things abroad and have a different standard of living, then all of a sudden you could be politically vulnerable. It doesn't seem like they worry about that as much, though, because they've created it 40% in 10 years' time or 13 years' time. So it's a really interesting balance, I find.
In 2024, CME introduced a micro version of the Nikkei 225 dollar-based and yen-based futures contracts, which then complemented the existing, what we might call standard size Nikkei 225 yen and dollar-based futures index. So to put that in perspective, the US dollar, the standard size Nikkei index, would be worth about $190,000 in notional exposure, whereas the micro at 1/10 of that would be worth about $19,000 in notional exposure. How would you view these two different size contracts, and how might you take advantage of the fact that both are out there?
Well, it opens the door to so many more participants. Think of the $190,000 Nikkei. And we've already established that the Nikkei is a volatile instrument, mostly because of the yen volatility that's underneath it. But it's very, very volatile. So $190,000 of an instrument that can move 3 or 4% in one day's time, that is a lot of money. So all of a sudden now you make 1/10 of it, and a retail trader can be much more comfortable with expressing their opinion precisely with the $19,000 contract. So I think it's a big deal to opening the door to the use of these products to all the way down from institutions to the retail trader.
And not to mention, right, the US-based equity indexes that really kind of started the micro craze in earnest here at CME Group, right? And Eric, we've got, like I said, we've got a US dollar denominated future as well as a yen denominated future. What's the difference? How would someone look at the difference between those two things? And why would we have them?
So basically, it depends whether you want the currency exposure as well as the index. If you're an American investor and you want exposure only to the direction of Japanese stocks, you can buy the US dollar denominated one. On the other hand, if you also want the currency exposure plus the Japanese stock market, you can get the yen denominated one.
One of the benefits here at CME is that we have this vast array of asset classes and different products, some of which are correlated with one another and some of which are uncorrelated with one another. And now that we have this micro-sized version of the Nikkei, I would assume, Jim, and as a trader, let me know, this invites also spread opportunities if you wanted to take a position on what you thought the Japanese stock market was going to do versus, let's say, the NASDAQ or the S&P or something here in the States.
I like that question a lot because absolutely it does. And I think it's a really interesting pair trade from a couple different angles. So if you look at it, we said the micro Nikkei is 19,000 US notional. The micro S&P is 24,000 US notional. So you'd say to yourself, how would I balance that to get dollar equality? Or you say to yourself, wait, the Nikkei is considerably more volatile than the S&P, so perhaps that naturally becomes the right ratio. That's one component of it too. So now all of a sudden you look at the two economies, and if you want to express a trade, and I know there's a lot of different things that can go in it. We have global election risk and policy risks all over the globe, and if you think something is going to happen that could make the US economy stronger and leave the Japanese behind, that'd be an excellent opportunity for a long the micro S&P, short the micro Nikkei.
Yeah, and sometimes though that slight difference in notional value, but also slight difference in volatility, is what makes a trade interesting in the first place, and trying to figure out what exactly your perception of how that's going to play out is.
Now you're starting to think like a trader. Always trying to find the little nuance that could give you the advantage. I think that's really interesting.
So let's try to look ahead just a little bit here. We've done a lot of history of the Nikkei and kind of how we got here. Eric, what are the key things that you're looking at as we move towards the end of this year?
So the key things in terms of Japan would be the future direction of BOJ monetary policy. Japan has a colossal level of debt. So if you add up all the public and private sector debt in, say, Europe or the United States or China or Canada, it comes to between 250 and 300% of GDP. Japan's at 400%. If they keep raising rates and the yen keeps going back up, that could put a lot of downward pressure on Japanese stocks, both because they're highly leveraged and because of their vulnerability in terms of exports to a stronger currency.
Let's pretend you were going to put on that spread. How would you look at it as a trader?
So he mentioned the mountain of debt, which is absolutely undeniable that there's a mountain of debt. I mentioned before the hangover from 30 years of deflationary worries. I think the Bank of Japan is having a very difficult time in their head raising rates with inflation running around, what are we running around, 2.8% right now in Japan. So down from a high of 4.5, much, much lower than we had here. So I actually think the yen goes lower. Because I don't think they're going to be able to hike rates like the market's anticipating. So I actually think then the Nikkei probably goes lower as well. So if I was looking at that pairs trade, personally, I don't make any recommendations to anyone else, I'd be interested in putting on U.S. Equity markets, selling Japanese equity markets in the form of the Nikkei 225.
Given that, what would you be looking for to kind of monitor that trade? What sort of signals would you be looking for?
So some of the recent economic data in Japan has been disappointing. Weaker household spending, weaker than expected PMIs. The market right now says that the Bank of Japan is going to hike rates again in January. If we continue with getting disappointing economic data, they're going to start to second guess that. And when they start to second guess that, I think that'll be the indication that the trade is on.